The Americans played the Russians in Lake Placid in hockey in 1980 in the Olympics. It was quite a thrilling event in my childhood.
I was there.
You know, good for you. Okay, this is about me. Okay, it's a very thrilling event, and it was, as you know, it was politically symbolic on many levels. The Cold War, all this and that, Russians, the kids versus the Russians, all these things.
Yeah.
But at the essence of sort of my indoctrination as a young fellow
Yeah.
was the indoctrination, propagandization, in whatever you want to call it, that the American way, that truth, justice in the American way was the best way or was a better way than the Russian way or the Chinese way. And the critical, I would say, the key distinction. There's obviously one key distinction was the American way was presented as a more free way, of freedom, more flexibility, more liberty, truth, liberty and justice for all that jazz. And one of the other core principles of the American way was a strong separation between church and state, but also a strong separation between the private industry and state. And up to the extent to which where the Russian society and the Chinese society was ridiculed for what was deemed at the time a centrally planned economy, and that the idea of central planning was a disastrous way to operate any economy, let alone a massive economy, because the further the distance between the executives and the capital and the customer, the worse the decision-making gets. So if you consolidate all the decision-making in a central Politburo, that the Politburo is so detached from whatever's going on the customer level, it slows down innovation, it reduces customer service, it makes for a weaker product. It basically, the reason America has more variety, more innovative, more product, more resilience, more flexibility, more productive, and the reason America won, so to speak, as an economy relative to the Chinese or the Russians is because it was not a centrally planned economy, but in fact it was a distributed economy where capital flows freely among small groups of people who are able to experiment and compete and try to invent better mousetraps, whether it's a better brokerage firm or a better coffee shop or whatever it is. This was like the central principle of what made America different from the other sort of towering economies and powerhouses of the world, specifically Russia and China. So I was honestly somewhat confused, befuddled, and even a tad bit disturbed when I recently read that the U.S. Commerce Secretary recently negotiated a new class of stock. As you know, in the shareholder world, you have different classes of shareholder where people have preference. So if you have an A share, you get this, and you get to vote, and you get the money first, or you get to decide things. And if you have a B share, you get whatever money's left over. And if you get the C share, you get no voting rights. You can create all these different classes of shares as a way to sort of govern an entity. And for the first time ever, I believe in American history, a new class of stock was recently invented by the Commerce Secretary that they're calling a G share, Class G. And there's only one. You get one. It's just one share. Everybody else has got A shares, B shares, preferred shares, subordinated shares. In fact, my first internship was at Merrill Lynch, I'll have you know, and this is pre-internet. And my job, I worked I was an intern in the compliance department at Merrill Lynch at the World Financial Center. Very exciting building to work in as a young fellow, but brutally, horribly, horrible job. Oh my God. Anyway, and so the job was to go through all of the new issue prospectuses, all the bond prospectuses, all the equity prospectuses, and organize them by preference. So like this would be the senior support, this is the senior, this is the subordinated, this is the convertible, this is whatever. And you have to like arrange all the prospectuses for AT&T and arrange all the prospectuses for General Motors, whatever. And so I'm a longtime aficionado, if you will, of the various classes of stock. But I would even venture to assert that I'm an expert in this particular area. And I will say, despite my various expertise and training, I've never before heard of a G share. And so I took it upon myself to do a little research. And the G share, while it's only one measly little share, the rights assigned to the G shareholder, first and foremost, are veto power. And as you know, having built and run many businesses, that the ultimate power inside of the governance structure is not the power to do things, but rather the power to prevent others from doing things, right? So it kicks up. So the CEO can do this, but the board can say you can't do this, and the board can say this, but the shareholder can do this. And so the G shareholder apparently holds the ultimate veto power and has a specific list of, a specific list of mandated best practices in terms of where the jobs must be located, or sort of how labor and capital must be managed. So there's a mandate for how labor and capital must be managed, and failure to comply with the mandate for how labor and capital must be managed can be met with the veto power of the G share. And the deeper I got into it, I was like, well, who's the G shareholder? Who has this G share? And lo and behold, the G share is negotiated to be held, and all the voting rights of the G share are negotiated to be held by none other than the President of the United States of America, who is not a private sector individual, who is not a member of the board, who is not an investor in the company in any way, shape, or form, as a matter of fact, who maybe probably knows nothing about the business whatsoever. And or it could be someone that the president designates, apparently, a designee, if you will. I think they call it in the court of law. And so then I was reflecting on this G share, and I was trying to understand, well, what's the difference between a G share, which assigns the president of the United States ultimate veto power over all governance and operations at a private sector corporation, and a centrally planned economy at the Politburo in Beijing or Moscow. And quite honestly, I couldn't find a distinction. So a couple of questions before we get into the weeds on this, but I am curious, am I wrong to see this G share as a modern equivalent of a centrally planned sort of,
Yes.
It's a mechanism to exercise power by way of central planning in the government? Yes.
Yeah, it's not the same thing. I'm not defending it, validating it, or any of that yet.
Wouldn't the G share be the government share even? It probably stands for government.
Probably. I assume it does. But the idea, the difference is that this is a foreign company that is trying to buy a U.S. company. So this is not a U.S. company that the government is demanding to participate in controlling or having veto power, controlling the board and doing whatever.
It's not the G share taking over tastytrade.
It's not the G share taking over tastytrade. It's not the G share taking over Apple or Amazon or anything like that. This is the G share stepping in to facilitate a multinational deal in an area that there are monopolistic risks. And so what the G share is, the objective of the G share here is I believe it's to essentially level the playing field and protect the interests of other companies in that space. So it's essentially saying that and this is, I think, the thinking. I'm not saying that this is right. What I'm saying, the thinking behind this is a deal where there is advantages to scale for both U.S. Steel and Nippon Steel. And because of that, this is a deal that actually makes sense. But it's also a deal that creates some monopolistic risk in the steel industry in this country. So in order to facilitate this deal and keep everybody else at least to take some of the risk and fear off of the away from the industry, away from the steel industry, is to say we'll create this other class of stock, and because we've created this class of stock, we protect the integrity of the free markets in the world of steel, so they cannot create a monopolistic, price. They can't basically force price. They can't force different things, from regulation to price, to innovation, to sales practices and everything else. So I think that's the some of the rationale behind it. Here's my issues with it, because there are a lot of issues. First and foremost, why is the president of the United States involved? Like, it'd be one thing if there was a domain expert that was involved, but the president of the United States cannot be, on the one hand, managing his own businesses, on the other hand, managing the country, on the third hand, managing all the culture in this country, if it's the Kennedy Center or something else, and then on the fourth hand, which managing an industry that he doesn't understand one bit. That all is scary in itself. So I don't understand how that directs up to the executive branch.
But just not to flip it over, but so what about this? What if the G share is a way to allow foreign capital to inject foreign capital, in this case Japanese money, but it could be German money or right, Canadian money or whoever? What if right, the G share is an active? What if the G share stands for genius, and it's a way to actually allow for foreign capital to more easily flow into investment in the United States while managing the risk of foreign control of core U.S. industry?
I mean, there's another side to this too. That's a very fair point, Dylan, but there's another side to this too. U.S. Steel is a publicly traded U.S. company. Nippon Steel this is not necessarily a hostile deal.
Yeah.
Not at all. And so U.S. Steel could have easily said, we have no interest. I mean,
yeah. Well, I understand, like that this is a mutually agreed to
this is a mutually
that this is basically a government. This would be like the same way that antitrust might say, well, listen, Tasty Trade can't merge with Schwab, can't merge with E-Trade, can't merge with whatever.
I mean, the government,
it's like an antitrust action.
The government is facilitating this deal because both these companies, U.S. Steel and Nippon Steel, think they're a 1 + 1 = 3 or 4 or 5. I mean, that's the whole reason for this. So they both agreed to this. So they see there's obviously a lot of positives. I mean, we're just outsiders looking in saying, oh my God, this is a really bad, precedent being set. But the reality is, I mean, both these companies obviously want it, and they looked to the executive branch to make something happen. And so, so the question then becomes, is this what's going to happen to here's a better, let me put it this way. The risk is that we do not want the executive branch to get involved in free market deals, free market enterprise, the whole concept of corporate action, everything else. In this case, it might be a one-off to facilitate a transaction that was not allowed to otherwise go through. And so the question is, is this just good negotiation, or is this a way to get something done so it just the optics are better, or is it, this is what both companies wanted, so this is the way to facilitate it? Or is this something that the executive branch can use in the future to kind of control all deals? And that's the scary thing. And domestically, I don't think that's even possible. Internationally, that's different, because you can it's like throwing the franchise tag on every single international company that wants to buy a U.S. company, or maybe vice versa if other countries get into the act. So the dangerous thing is that this kind of control spreads, and it doesn't line up with what we consider to be true free markets. The positive side is that they helped to facilitate a deal that wanted to get done.
Yeah, and I'm just sort of reflecting on it as this discussion is influencing me a little bit. So a couple of things occur to me. The government's always involved in business, whether we like it or not, primarily through tax policy, but also through permitting and blah, 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 blah.
Yeah.
Two, the government always has at its disposal the ability to interject itself into business by way of antitrust law using the Department of Justice. What I find the most concerning about this, let's assume that the G-share is well-intended and that it's meant to protect U.S. industry while at the same time facilitate the flow of foreign capital into U.S. markets.
Okay.
The road to hell is paved with good intentions, as they say, because the risk with the G-share is that the G-share does not reside with the Congress, which sets tax policy, or does not reside with the DOJ, which controls antitrust, but rather it's a single voting share controlled by the President of the United States in a unilateral manner. And it introduces the implied threat or possibility that a G-share could be assigned to any company at any time. Right. I mean, I think that on the one hand, you can say, listen, I guess that the whole issue with the Trump administration and the way it does business, in my opinion, and my biggest objection to it, is that and we had this discussion last week or 2 weeks ago, it eliminates any dialogue or adversarialism about decision making. So as opposed to it being either through the DOJ, which then has to go through a court of law, and there's an opportunity for a prosecution and a defense and an appeal and blah, 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 or a legislative process, which requires, hundreds of votes and all the legislative process. This becomes a singular executive function with a unilateral control residing with one individual, which in this case may be used for a relatively positive intention to facilitate a mutually desirable deal, both by the domestic target and the foreign buyer. But it introduces a mechanism of power that has there's no appeal, there's no debate, there's no court of law, there's no legislative process. It's a simple restructuring of the operating agreement of any company to introduce a unilateral vote, which I think is probably terrifying for everybody. I mean, I guess the question is, especially when you see Trump using the National Guard, when you see Trump using the Marines, when you see sort of the Trump's attitude towards the use of power relative to the existing legal.
I think you can take it a step further when you see him go back to using, executive orders and statutes from the 1800s. I mean, that's the scary part is, how broad, if this was narrow, that's fine. If it's broad and he can, get involved in everything because he likes to be involved in everything, from putting out forest fires to whatever it is.
To redirecting hurricanes.
Yeah, to redirecting hurricanes. This is the scary part. You have a man with severe mental decline and, trying to get his fingers into every single decision that's being made.
I mean, so a centrally planned economy would be, so if it was Russia or China, they would say every company that operates in country needs to have a G-share.
Yeah. Right.
Like that would be the end game, right? Where it's like, if you have a new co or an old co, any co, in order to have permits to operate your brokerage, your coffee shop, your tech, your Amazon, your whatever, you must amend your operating agreement to install a G-share.
Right.
If something like that were to happen, I would think there must be an uprising at that point.
So the strange thing about this, I shouldn't say strange, but the interesting thing about this discussion today on truth is that everybody thought we were going to go the direction of, this specific deal, U.S. Steel and Nippon Steel. And I don't think that is the risk. I think the risk is, what you just discussed is how deep does this get? And is this is this open to some kind of executive branch abuse down the road? Is this going to be, I'm not saying blackmail, but are we going to hold this over every single deal?
And is it a move towards is it incrementally a move towards a centrally planned economy? But I could also argue, well, the DOJ going after Microsoft 20 years ago
Well,
was
sure.
central planning. I mean,
Sure. Because
you can argue.
Because in today's world, Dylan, any company, we have companies that are bigger than the GDP of most countries. And so you have companies like, Apple with, a $500 billion in cash. And you have companies like, just Nvidia with $500 billion in cash. The argument can be made that any one of those companies is close enough to a mega tech monopoly that any deal can be fit under this classification, that it's a monopolistic, it has the risk of monopolistic underpinnings. So, okay, so now what do we do? And that's the whole risk to this thing. Now, the other side of it, if it's used correctly and it helps to facilitate deals that normally wouldn't get done, that are beneficial to the companies, and the companies ask for it, which it might have been what they did in this case.
Yeah. It could create a huge flow of foreign capital.
That's right.
I mean, it could be amazing.
I mean, if I was a foreign company, this would be a very difficult decision to make. But obviously, there's not too many companies like U.S. Steel, and a company like Nippon Steel says, okay, well, I'm going to give up the extra draft pick to get this deal done. And that's essentially what it is. So I'm not going to complain about that particular deal. I think it's just important that we point out the risks.
You just raise it's like, okay, good, but also like yellow card. It's not a red flag.
Yeah, exactly.
It's a yellow flag.
Exactly. I mean, we don't want to create what I can't stand is like what happened, just to give an example, like a company. What's the company I'm thinking? Oh, like a Spirit Airlines. I know it's a crappy example, but JetBlue wanted to do a deal with Spirit Airlines. I think it was JetBlue. I'm pretty sure it was JetBlue and Spirit. So you have Spirit, basically an airline that can't survive on its own. And you have JetBlue, an airline that hasn't done anything in 100 years. It's a whatever, $5, $7, $10 stock, whatever it is. And so JetBlue figures, okay, economies of scale, we take over Spirit. We pay a couple $2 billion for Spirit and blah, blah, blah. So the government comes in and says, no. This deal, too many gates, too monopolistic risk, the routes, fares for customers, blah, 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 blah. You can't get the deal done. So then Spirit files for bankruptcy and JetBlue goes down the toilet. How does that benefit anybody?
Right, well, then you could easily argue central planning again. You could say, what is this, Russia? I mean, it's the same. The same rhetoric is applicable.
Yeah. But now you lose two companies, now you have companies, and you see this all the time. These are not the only companies. You see it, in the restaurant business, even when, companies like, just as an example, I have Red Lobster. I can't remember who the other companies are, but you see this happen in virtually every industry, and they get blocked for monopolistic reasons and questionable at best because they're only a few billion-dollar companies. And yet at the same time, you start to wonder, okay, there's got to be a better way. And I'm not saying that the government needs to be involved in every one of these deals, but there easily can be a better way than watching a company go out of business. Nobody benefits from a company going out of business. Nobody would benefit from U.S. Steel going out of business.
Well, what it reminds me of? I mean, just to sort of pile on to your point, which because the government has acted in the opposite way. I think it was Enron, and I think it was Anderson Consulting. One of the big four accounting firms or whatever was sort of tangled in the middle of that Enron situation.
Yeah, I don't remember. You could be right. I don't remember who it was.
And they basically went in and they said, we're not. The big thing was, are they going to bring down an indictment on the accounting firm for their certification of the Enron books, which then facilitated all the things, all the downstream negative effects. And I believe the decision was made not to do it because the decision was made, if we come with the indictment, it's a death sentence for the company. And then the world is as bad as it is that the accounting firm has facilitated the fraud, that the world is worse off if we kill, not if Enron goes away, but also if the big accounting firm. The point is, or even the bailouts in 2008, the basic logic was this is morally reprehensible, this is a theft, this is all the things. I said lots of things, lots of people said lots of things, but the final decision was made, well, we're better to allow all of these horrible things to happen than to go the other way, and which is to have all the entire banking infrastructure liquidated and have to start from zero. So the point is the government makes decisions regularly to allow for unsavory structures, i.e. this one airline has too many gates, or this bank made too much money, or this accounting firm certified fraudulent books, because the alternative is a death sentence for the company, and the decision is made that allowing the moral rot of the decision to be the permission of the moral rot is a superior alternative to the death sentence. All of it's central planning at the end of the day, by the way. I mean, it kind of brings up the idea that maybe no company should be so big, that maybe the world should be dominated by smaller enterprises, which is an entirely different philosophical debate, because so much of what we benefit from now is based on scale, right? A bunch of small Amazon.
And I don't think we could have, I don't think when a lot of the original, when a lot of logic and rules went into place, I don't think anybody could envision companies being multi-trillion-dollar companies that are literally bigger than the GDP of most of the nations in the world. So I think it's it's challenging to go back and so on the one hand, I don't hate the decision of what they did with I don't hate the whole thing what they did with U.S. Steel and Nippon Steel. On the other hand, we have to make sure that it's checked.
So, this whole thing kind of brings up the second thing, which is fascinating to me, and honestly, it's encouraging to me, even though it's bizarre in its own way, which is whether it's the Trump tariff policies or this sort of G-share discussion, which either way still is assigning tremendous power to the President of the United States uniquely, not the DOJ, not the Congress, et cetera, or the horrifying events we're all seeing in the Middle East, sort of spiraling a bit. That the market seems indifferent, stock market especially. It's expressing little to no concern about Trump's economic policies, whether it's the legislative proposals, whether it's the tariff proposals, or whether it's things like this. And it's similarly indifferent to obvious geopolitical issues that even caused one of the biggest oil spikes we've seen all year. And I'm just kind of curious whether it's geopolitics or whether it's presidential economic policy. I find it very encouraging. Because I think sometimes I'm like, oh man, this is terrible, and then I'll look at the stock market, and the stock market is utterly indifferent, which actually then gives me some reassurance that my perception is obviously wrong, because obviously the stock market has a much greater understanding of the consequences and status of the various economic policies or geopolitical events than I do from flipping headlines on a computer. But I'm interested in sort of your perspective on the market's apparent indifference to both geopolitical and economic policies at this point. I mean, is this how it's always been?
It's not how it's always been, but it's how it's always been recent. It's how it's always been recently. As news gets disseminated faster, and as we internalize / commoditize things at a much faster rate, what's happened is that, and I talked a little bit about this morning, portfolio managers, hedge fund managers, traders, prop firms, they have underperformed, and they've gotten burnt time after time after time trying to analyze, geopolitical events, economic events. It's what we've said at Tasty for 14 straight years. Nobody really knows anything or how the market's going to react to something. Sometimes there are extreme critical circumstances and things that we really don't know how to process. A pandemic, for example, tariffs for the first time in however many decades, that kind of stuff. But for the majority of things, specifically war, as sick as that sounds, we kind of know, in this day and age, we kind of know what that means. We've seen enough wars. And so what happens is the money manager, the portfolio manager who tries to address the risk or what they believe the perceive the risk to be, or what they perceive the geopolitical risk to be, has not only not been rewarded, they've essentially lost their jobs.
Mm.
So if you liquidate and if you reduce the size of your position, which obviously this is another situation like that, you underperform the rest of the industry, you're out of a job. It doesn't, and with nobody liquidating now, unless it's a different kind of extreme, then you're better off doing nothing. And that's what's happening.
And but does that same thing apply with do you think that same thing applies like with the tariff madness, for instance?
No, the tariff madness was something that was, there are certain things that catch us by surprise. I said the pandemic was one. The whole meme stock thing was another a little bit, but the tariff thing was another. Like, it's very hard to judge the magnitude of certain things, especially things that we haven't seen before. Tariffs were new to us. The pandemic was new to us. Our inability.
I see what you're saying, but the war at this point is no longer new, which is a horrible thing to comment on the world.
War is second nature.
Right. You're like, sure.
Yeah.
Another one.
And it's a war between two countries that have,
they've been itching for this from day one. I mean, this is what they do.
They've basically been at war for
50 years.
Yeah. I mean, and carefully, it's smart because nobody else has gotten involved. It's isolated, just like Russia and
Ukraine.
Yeah, Russia and Ukraine. Like if North Korea had sent troops into Ukraine on day one, it could have been something ugly for the markets, but it wasn't. And so it's isolated. They put it to the side. The market internalized it. Now we go on to this war. Crude oil volatility goes up. Okay, great. But everything else internalized. We move on. That's it. I mean, it's on the one hand, it's good to see that the markets can price everything almost instantaneously. It's also good to see how news is really it's really for show, and it's not really for making money. On the other hand, it's a little bit scary how numb we've become to human kind of catastrophes and to some of the inhumanity that's out there right now.
Well, I just want to do a quick plug because I'm excited. So this is obviously, Aaron, this is a Wednesday event here. And so we're getting through this, which means that tomorrow you're going to be in London Thursday morning.
Yes.
And I believe
Wednesday morning.
But Thursday morning, I believe I am going to be on air with you and Tony and Angeline and Rich.
Oh, Thursday morning. Yes.
Thursday morning UK time. It'll be a historical event where you'll have the two big kahunas out of Chicago.
No,
TNT.
Friday morning. The market's closed on Thursday morning.
All right. Then I don't know if that's a debatable issue.
No, the U.S. market's closed.
We're in Europe. You're coming to Europe, pal. And the London market is open Thursday morning.
Oh my God, you're going to put me under the gun for the London market?
And my schedule has me on air live with none other than Rich, Angeline, Tom, and Tony. And I am happy about it. Maybe you're not in the loop. Maybe you're too far up the food chain now. They don't tell you these things. You got too many other more important affairs. So we'll save it.
I'm simply going to London to find the best fish and chips. Okay.
Well, that will be easily accomplished.
I know. Yes, I messed up my dates. Friday, we will be doing the morning show from London, but Thursday the market's closed, so I got to check my schedule. But we'll figure it out.
Well, listen, I wish you the most pleasant journey. We're excited that you're coming to London. I know that the Brits go crazy for you. You yourself are basically half British by virtue of your indoctrination as a parliamentarian when you were an intern. And then Italy.
I was a tour guide, Dylan. I was a tour guide.
Whatever. I'm sure you were the best tour guide they ever saw. I'm sure you've been doing a good job from day one.
You know how I learned how to be a tour guide by listening to real tour guides.
Listen, that's how you learn anything. It's like it's a proper apprenticeship.
I would sit there and listen to these guys tell stories, and I would try to make up the story in my own words. I feel like Kramer and Seinfeld when he would go through Central Park and make up stories about, whatever happened there. I think I
Well,
was the same way. I would
England is easy. You just have to talk about Churchill and they're happy. Anything about
exactly,
Churchill
exactly,
and they're satisfied.
exactly.
So,
All right, Dylan. And by the way, Lake Placid in 1980, I saw the U.S. play Romania, not
okay.
not the Russians. But I was
Okay.
there for the game. I think it was Romania. It was either Romania or Czechoslovakia. I think it was Romania. And it was awesome.
It was awesome. It was
It
one
was
of the most
awesome.
awesome things that has happened. So it was pretty awesome.
Ticket price? Ticket price?
20
25.
bucks.
25.
Yeah. Modern in the modern. Oh, by the way, one last thing, because I know you're flying.
Yeah.
Make sure you request seat 11A.
I've already got that, Dylan. It's the most requested seat in America now. You have to wait 17 years to get a seat 11A, no matter what on any airline. Seat 11A is the number one requested seat from now until the end of time. Okay.
Did you see they found a second guy? There was some guy apparently 20 years ago who also lived through one of these
I don't
crashes.
know if I believe that.
He was also in 11A. This
I
is
don't know if I
validated
believe that.
twice.
I
11A,
heard
bro.
that. I'm not believing it. I'm not believing it.
Fake news on the second guy. All
I
right.
think so. I'm not believing it.
I mean, I questioned the first guy. How could that plane do what that plane did? And that guy walks out of there with a scratch on his cheek, and everybody else is dead. 11B is dead. 12A,
I don't know.
9A. What's going on?
All I could think of is that he fell asleep and he missed it. Like he just,
He walked away.
I know. It's unbelievable.
11A, bro.
Unbelievable. Send that guy out to buy some
Tony
lotto tickets this week. Okay.
All right. All right. Safe travels.
All right. See you
All right.
soon.
All right. Bye.
Bye.